Hi, welcome. I'm Raj Venugopal. Today we are going to discuss about the various investment strategies. What we got here is stocks, real estate, gold, and OPM. What I mean by OPM is other people money. Now, of all the four investment strategies, the best is stocks, and after stock it's real estate, and after that gold, and after that it is OPM. I'll explain shortly, the reason behind uh, this. So let's get started. Stocks. Stock represents a piece of a company. It is a wealth that you own. Stock market is driven by mass emotion. So learn to use this emotion to your favor. So if you're in charge of your emotion during its highs and lows, then you can do much better. Now, based on my personal experience, stocks are most likely to outperform other investment strategies. The main reason is, for example, um, let's say the business has only 100 stocks. It trades only 100 stocks, and then you got a chance to buy two shares out of that 100. So what it means is you have a 2% ownership of the company. Now, when that company makes money and decides to share the profit to the investor, then you get the 2% of the money that is distributed. Now that's how it works. Now there is a potential that you can lose all your money as well if the company does not performs well and goes to bankruptcy. You will lose all your money. So you have to be very wise when choosing the business. Now I can give you some overall advice on some of the stocks you can either choose or avoid. Like for example, the software technology stocks and the social media stocks are great in the short run, but a drag in the long run. And hardware and telecom equipment stocks are much worse than the software counterparts, so be careful there. Based on historical data, airline stocks are always bad to own at any time. So choose a company that provides service or products that common people like us use every day and stick to it for the long run. If you can do so, a good return on your investment is guaranteed. And finally, be an investor and not a trader. So it doesn't matter. It doesn't matter whether you make money or losing money, but you have to pay the commission to the broker. Each trade has a commission as a transaction fee involved to make the trade. So if you're making hundreds and thousands of trade, you're definitely making money to your broker, and if you're losing money as well, then it's not going to end good for you. So just be careful. So select a good company and try to be an investor for the long run, and a good return on investment is guaranteed. So the next best investment strategy is real estate. It is the only investment strategy where it is common to buy the asset with only 20% down payment, and the rest of the amount is supported by the banks in the form of home mortgage loans. The best thing about real estate is the asset grows up in value every year, and the real estate market crashes very rarely. And if you don't have enough money to buy the physical real estate, then you can still make money by investing in real estate investment trusts such as E-REITs and M-REITs. E-REIT stocks are, if you want to know about E-REITs, revenues come principally from the property rents, and M-REITs, basically the revenues are generated primarily by the interest that they earn on their mortgage loans. So there is a way. In this way you can make money in real estate if you don't have enough money as well. So the next best strategy is gold. To be honest, I do not like this asset class, but there is a potential to make big money in the long run. The problem with physical gold is you can only make money when you sell the gold, which in most cases very hard thing to do for anyone. Just imagine if you can sell gold every month and take your profit every month. That will be an awesome case, right? So I decided to buy stock of number one gold mining company. Now I want an asset, the business that produces another asset, gold, every day and shares the profit with me on a monthly basis in the form of dividend. So this is how I invest in gold instead of investing in physical gold directly. Now, gold is a investment is a hedge against inflation. So that's one of the greatest thing about gold. and and it is inversely proportional to the strength of the currency. So if the money loses value, the value of the gold is going to go up. So and it's always good to have at some point, if you want to have you can have this gold as part of your investment strategy as well. Now the last one is other people money. Now opium is like drugs. There are good use of opium and there are some bad use of opium. Now home mortgage loan is a good example of opium, and a credit card debt is an example for a bad opium. Now, any manageable amount of opium will help you grow financially stronger. An unmanageable large amount will kill you financially in the form of bankruptcy and foreclosure. So be careful when choosing the amount of financial opium that you're going to borrow from the bank. It can be for to buy your real estate, or to grow a business that will eventually will become a multi-billion-dollar business in the future. But if you have to be very careful on the amount you're going to take loan. So just be careful, and then you can make a uh, you can grow your wealth by this way as well. Now that's all I got. If you have any questions, please let me know. Feel free to write your comments, and I'll try to my best to respond to your question. Thank you very much. Take care.